make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
We have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
Today's podcast is sponsored by Nutrafol. Nutrafol is the #1 dermatologically recommended hair growth supplement, clinically shown to improve visible thickness and strength. Nutrafol is offering our listeners $10 off on their first month subscription and free shipping when you go to Nutrafol.com and enter the promo code GOLD.
The Peter Schiff Show.
Hello, everybody. Before I forget, because I actually meant to mention it on my last podcast, I am going to be appearing at the New Orleans Investment Conference November 20th through the 23rd. So that's coming up in about a month. So you still have time to make your arrangements, book your flights, register, get your hotel. But I go to this conference every year, New Orleans Investment Conference, the granddaddy of the gold conferences. I always enjoy it. I'll be bringing my wife with me, so have a chance to hang out with us and a lot of other great speakers that I look forward to seeing and spending some time with. So I would invite everybody. You go to the website and you can sign up for the conference. It's a great city too. I love being in New Orleans. A lot of great restaurants, great jazz. So it's always a good time. And, we'll be there for the entirety of the conference. By the way, I know a lot of you have been listening to my wife's song. I noticed now we have like 40,000 listeners on Spotify. They stream the song over 70,000 times. And so, it's a pretty good start that she's got. More people are listening to it more than once, so they must like it. And by the way, the streams only count if you listen for at least 30 seconds. So if you're listening to a song for 30 seconds, you probably like it. People, if you don't like it, you just move on to something else. So if you haven't heard it, you should check it out. The song is called GYB, and her next song is coming out on November 1st. So that one is called Jerk, and that's even a better song. They're both good songs, but I think that song is even better. I talked too about the New Orleans conference because it is the oldest gold conference that there is in the country. It's been going on for a long time. Jim Blanchard started it. He's no longer alive, but we only get about maybe 500-600 people there. Whereas the Bitcoin conference that they had in Nashville had over 20,000 people at that conference. And so it gives you an idea of how much interest the public has in Bitcoin versus how little interest they have in gold. Now, the price of gold rose again on the week. It was up about 1/3%. Had a rocky week up and down, but it closed up. It closed at 2,749, just below 2,750. This is the highest weekly close in the history of gold. It was up $12.40 today, and it was down about $20 in the morning. But, they bought the dip, and we had the highest weekly close ever for the price of gold. We are, though, about $6 lower than we were on Tuesday night when I did my podcast. That was the all-time record daily close. And so we did go down. Silver had a rougher week than gold. Silver was down about $1.6% or so. It closed at 33.77, more off the high. So a bigger correction there. Some people, want to make fun of me because my last podcast, I titled it, gold and silver are about to melt up. And then, of course, the next day they went down. But melt ups aren't going to happen without any down days. Gold's going to have down days. In fact, it may even eventually have a down week, but it's going to go down. It's not going to go up in a straight line, even as it's melting up. But it's pretty clear that we're going much, much higher very fast. I used the melt up because they were talking on CNBC about the stock market melting up when it was the gold price that was melting up, not the stock market. The stock market was melting down in terms of gold. And in fact, the Dow was down on the week. It was down about 1.7% as gold went up. So that means in gold terms, you're talking about a 2% decline. The S&P was also down about 0.85%, so more than 1% in gold. Only the NASDAQ was up on the week about a third of a percent, which means it was about a push if you price it in gold. But the Russell 2000 got killed. It was down 3%. So it was a rough week for equities, but gold went up. But it was not a good week for gold equities. And that's really what I want to start the podcast talking about, is what's going on with gold equities. Because even though gold was positive on the week, gold stocks got crushed. The GDX, which is the seniors, the biggest index, was down 5.3% on a week. On a week when gold is up, it was down 5.3%. Now, the GDXJ, which is supposedly smaller companies, was only down 1.7%, still down. But the reason was Newmont Mining, the biggest gold company in the world, the only gold company in the S&P 500, reported earnings after the bell on Wednesday. And so there was a reaction on Thursday, although Newmont also trades in Australia. And so the shares in Australia were able to react. And of course, we have after hours. But initially, the stock was down about 5 or 6% in after hours trading and in Australia. And that's about where it opened on Thursday yesterday. And then it rallied a bit and it was down about 2%. And then it collapsed. And Newmont closed the day down 14% and change. It was almost down 15%. But where it closed, down 14.5%, whatever that was the second biggest decline in the history of Newmont Mining. It's been around for over 100 years. And so that's the second biggest daily drop. And it was almost the biggest. If it was down a little bit more, 15.3, it would have been the worst day in the history of the company. It was down again today. And at one point on the open, it was down 5%. So you had a 20% decline in Newmont Mining. Now, you must think, it must be a disaster. What could have possibly happened that would cause the stock to go down that much, right? Because that is a huge decline in Newmont. Now, they reported their quarterly earnings. It was actually the best quarter in 5 years. And if you compare the quarter to the same quarter a year ago, they earned 6 times as much money. So it was way more money than the prior quarter. And they're still on path to have make the most money in the history of the company. I said the company's been around for 100 years. So even though the earnings weren't what they expected, they're still going to have a record year for earnings. The reason the stock got killed was because they missed. They were supposed to earn 86 cents on the quarter, and they earned 81 cents. So that's less than a 6% miss. The revenues were about in line. They may have been maybe 1% light. So the revenues were almost what they expected. But the profits were a little bit less. And the reason was costs. Their all-in sustainable costs rose or came out at $1,611 an ounce. So it cost them $1,611 an ounce to get the gold out of the ground, and they sold it at a realized price of $2,518. Now, clearly, they're making a lot of money. They're getting gold out of the ground for $1,600, and they're turning around and selling it for $2,500. That's still a fantastic business. They're making a ton of money. In fact, it's going to be a record amount of money that they made. But analysts were expecting costs to be $1,445. So, about $170 odd an ounce more than was expected. And that's the reason that they missed. Now, of course, gold companies have been missing earnings now for years for that specific reason, because costs were higher. They also increased their share buyback by an extra $2 billion, right? Because they have so much money. Instead of buying back $1 billion worth of stock, they announced they're going to buy back $2 billion worth of stock. Probably if this was anything other than a gold company, it would have gone up. And in fact, in the call, they addressed the cost problem, and they said that it was temporary. They expect costs during this current quarter to come back in line with expectations. They're estimating an all-in cost for the new quarter of $1,445 an ounce, which is, no, that's what they were expecting for this. I'm trying to find. I'm not seeing the number, but the projected costs for the new quarter were pretty similar to what they thought. So it's kind of on target. Like they're saying this increase in costs was really just a 1 quarter event. We don't expect the cost to be this high. We expect the cost to come down. Meanwhile, the price of gold, where it closed today at 2,748, is already like $225 an ounce more than they got last quarter, where they were getting 2,500. Now they're getting over 2,700 for the same gold that they're digging out of the ground. And so to me, this is still great. The company's doing great. It's having a record year. It's going to do even bigger numbers in the future because the price of gold is going up, and they have this 1 quarter where their costs were a little higher than expected, and the stock drops by 20%, wipes out the last 2 or 3 months of gains. Even though the gold price is up 8.5%, 9%, Newmont is lower than it was before that big move because they have this one bad quarter. And it's not even a bad quarter. It's a great quarter. One of the best quarters they've ever had as a company. And if you look at the PE on the stock, it's 15. And that's trailing earnings. The S&P is at 30 times earnings. It's got to be one of the cheaper stocks in the S&P, especially when you consider that their earnings are growing. I mean, I think the forward PE is closer to 10. And if you look at the historic average of a stock like Newmont Mining, it's traditionally traded at a premium to the S&P, not a 50% discount to the S&P, but it shows you, I've been talking about this the entire rally, that this is the most unloved bull market there is, and that the people that are in the gold stocks, because these stocks are so cheap, on any bad news, they just trash these stocks. They get killed. That's why we'll probably be at a new all-time record high in the price of gold, probably by Monday. My guess would be we'll set a new record high because we're only, less than $10 below the record high. We'll probably close at a new record high on Monday, but the gold stocks won't make a new record high because they lost so much. And gold prices did come down a bit intra-week. So every time you see a little drop in the price of gold, everybody panics. But I also think, again, these gold stock investors have been burned so many times because it's been such a long bear market in these stocks. Although, year to date, they're still up, pretty good. Even with the decline this week, they're still beating the S&P. But the minute they get some bad news, they're not taking this as an opportunity, right? They're just selling. Now, I think it's an opportunity. I think people should be buying Newmont. I think it's ridiculous that it went down this much. And, of course, other stocks went down. Now, you're going to have a lot of other companies that are going to report earnings. I don't think that the cost issues that Newmont had are necessarily going to be repeated with other companies. So I think there's going to be quite a number of these gold stocks that beat estimates. And I think eventually Newmont is going to start beating estimates. One of the reasons the costs were high were labor costs were higher. Labor costs are going down. The dollar has continued to rise this week. Dollar index at 104.3. That's helping these companies because their costs are in Australian dollars. In fact, that's where one of the areas where their labor costs were up, and now they're going down because the Aussie dollar has taken a hit in the past couple of weeks, and so that's bringing down their local labor costs. So in terms of Australian dollars, you've seen a much bigger increase in the price of gold in the last couple of weeks than we've seen in U.S. dollars. And, of course, oil prices remain low. So I'm very optimistic, but it just shows you how weak the investors are. right? On the first sign of trouble, portfolio managers, whoever owns Newmont, just unloaded it. Just looking at, they missed, by not even 6% miss from earnings that are dramatically higher than they were in the prior quarter, and it's the best quarter in 5 years. That's not bad news. Maybe the news wasn't as good as investors had expected, but it's not bad news. It's not a reason for the stock to go down by 20%, but it's just indicative of climbing this wall of worry that investors have been so worried and so suspicious of these stocks. And that's why it's a great opportunity. So that's what people should be doing when you finish watching this, listen to this podcast. I know it's Friday, so you can't really buy these stocks until Monday, but you should be buying these gold mining stocks. You should be buying my fund. My gold fund didn't actually own any Newmont. We had gotten rid of the Newmont. And so we took advantage. We did buy a little Newmont after it collapsed. Fortunately, we had been out of Newmont in my fund, but now we're getting into it. But you should be buying my gold fund, the Euro Pacific Gold Fund, on Monday. I think this was a gift to see a pullback in these gold stocks as substantial as this is, in some of these names, even though gold prices are at a record high and likely to continue to make new record highs. So you can buy the fund if you have an account at any of these discount brokers. You can go and you can buy the fund no load. There's a no load class EPIGX, EPGI. I always get the symbol mixed up. EPGIX is the symbol for the investment advisors class of the Euro Pacific Gold Fund. So you can buy that in any discount brokerage account. If you have an account already with one of my advisors, Euro Pacific Capital, or if you're working with my guys at Euro Pacific Asset Management, you can add money, or you can call up your broker and put some more funds into the gold stock fund. It's great to get any kind of a pullback, but especially on something as ridiculous as what happened with Newmont. And I think a lot of the other big stocks, they went down in sympathy because now people are worried. Oh, if Newmont missed, and if Newmont can go down 20%, believe me, there might have been some people that bought Newmont recently, and now they've been washed out. And that's it. I'm never going to buy these gold stocks again. I mean, that is a huge drop to see a company. Normally, something really, really bad has to happen to get a company to go down 20%, basically in one day. I mean, but no, nothing really bad happened. I wasn't concerned about it at all. Oh, also on the price of silver, we did get a little pullback, and we still have the sale going on at Schiff Gold on junk silver. I want to correct the mistake that I made in the last podcast. I said 10,000 face. I meant 1,000. So the bags are $1,000 face value, not 10,000. So 1,000. So when you buy, full 1,000, it's $1.20, $1.95, I think, over spot for the $0.50, and we're charging the same price on the $0.50 as we are on the dimes and the quarters, which has never been done before. So we got a great deal on these. We still have some available. And those can be bought over the weekend. You don't have to wait till Monday to get in on the junk silver special. You can go to Schiff Gold over the weekend and buy. You can talk to the representatives. They always work, 7 days a week. They're on call, and you could buy without talking to them by just filling up your shopping cart and checking out. Anyway, we got a quick commercial break. We'll come back. I got a lot more to talk about. A lot of stuff going on this week, so stick around. We'll be right back.
Are you interested in having hair that grows faster, stronger, and longer? Having visibly thicker volume, experiencing noticeably less shedding, thicker lashes and brows? All this is possible with Nutrafol. Nutrafol is the #1 dermatologically recommended hair growth supplement brand, trusted by over 1 million people. See thicker, stronger, faster growing hair with less shedding in just 3 to 6 months with Nutrafol. Thinning hair is different for men and women, so a one-size-fits-all approach to hair just doesn't cut it. Nutrafol has multiple formulas for men and women that are tailored to different life stages, such as postpartum and menopause, and lifestyle factors such as plant-based lifestyles, so you can get just what you need. Physician formulated with 100% drug-free ingredients, Nutrafol supports healthy hair growth from within by targeting key root causes of thinning: stress, hormones, aging, nutrition, lifestyle, and metabolism through whole body health. Get results that you can run your fingers through. For a limited time, Nutrafol is offering our listeners $10 off your first month's subscription and free shipping when you go to Nutrafol.com and enter the promo code GOLD. Find out why over 4,500 healthcare professionals and stylists recommend Nutrafol for healthier hair. Nutrafol.com, spelled Nutrafol.com. Use the promo code GOLD. That's Nutrafol.com, promo code GOLD.
Also, on the week, I didn't mention earlier, but yields on U.S. Treasuries continued to rise, as I have been predicting they would. The yield on the 10-year Treasury ended the week at 4.23. The highest we got during the week was, I think, 4.25. Maybe we ticked a little bit above that. But we're continuing to move higher, and I expect this to happen. And, Janet Yellen was at a IMF conference, I think, in Europe, and she was specifically asked the question, what are you going to say? What are you going to do, to encourage or convince people or countries to keep buying U.S. Treasuries, right? Because you got a lot of U.S. Treasuries to sell. How you gonna get people to buy? Like, what's your pitch? What's your sales pitch, right? Because really, that's what Janet Yellen is. She's the Secretary of the Debt, right? Not the Secretary of the Treasury, because we don't have any Treasury. The Treasury is bare. All we got is debt. So she's basically in charge of managing the debt and getting people to buy it. And so, what's your plan? How are you going to convince people to buy this stuff? And so Janet Yellen, her response was, well, we're just going to make sure that we stay on a sound fiscal path. How do we stay on a path that we're not even on? I mean, we left soundness decades ago. We can't stay on anything. If we stay on the path that we're on, that's insolvency. We're on an unsustainable path. I mean, everybody will say that, right? I mean, even the Fed will say, yes, the path is unsustainable, so we have to change course. We cannot stay on this path. Yet Janet Yellen somehow thinks that all we have to do is what we're doing, because according to her, we're on the right path right now. We just have to stay the course, and everybody's going to be confident in our solvency and our ability to pay our debt, which is completely ridiculous. Now, the other thing she said is we also have to make sure that, real interest rates stay at 2%, right? Which I assume she meant real. She said real. So she means that investors get an actual 2% above the rate of inflation. So if inflation is 2%, then rates have to stay at 4%. But 4% is too high. I mean, that's the rate we got now. And we're paying $1.1 trillion a year in interest on the national debt, and that number keeps rising as more debt matures that was taken out at 25 basis points. And maybe if the Fed can get the Fed funds rate down a little bit lower, if inflation is 2%, maybe short rates don't have to be 4%, and they could finance there. But she knows that we have to keep interest rates low, but there's no way to keep them low when we have so much debt and we have such high inflation. Anyway, the Trump trade, I think, is still on. I looked at the odds. I'm looking at the Kalshi right now, and he's now up to 61% odds of winning, and Kamala Harris is all the way down to 39. Now, I wanted to mention one thing, because I thought about this since my last podcast, where I said I thought that the betting markets were more reliable than the polls because people are actually betting. But I thought about that a little bit more, and I don't necessarily think that these betting markets are that accurate, because I think a lot of people are using the betting markets to hedge positions that they have. So let's say you have an investment that you think will do well if Trump wins, but you think it will do poorly if Harris wins. Well, how would you hedge that investment? Well, you would bet money on Harris. Even if you don't necessarily think she's going to win, you're going to bet on her as a hedge. So that doesn't actually reflect what people think is going to happen. Somebody might actually think Trump is going to win, and that's why they have certain investments, but they want to bet some money on Harris in case Trump loses. And it works the other way around. You have an investment that you think will do well if Harris wins, so you have to bet on Trump to hedge that, even though you don't think Trump is going to win. In case he does, you want to put some money there. And I also think that some of the people who own Donald Trump stock, which is up again, it's on a tear now, it's back almost to $40. But one of the things that really got the Donald Trump stock rising was the fact that Trump's odds were rising in the betting market. So it's possible that some people took positions in Donald Trump stock and then bought some and then bet on Donald Trump in order to get the odds on Trump to go up. So people would then get excited and buy Donald Trump stock. So I think there could be some manipulation going on where people are just betting on Trump because they think it'll impact other investments that they own that they want to sell. And so it's not necessarily that they think Trump is going to win. They don't really, they just want the markets to think it so that Donald Trump's stock will go up so that they can sell it and make a profit. So I still think Trump is going to win, but I don't know that you can rely on these betting markets because I don't think they just reflect people's opinions on who's going to win, because the people who are making the bets, especially the larger bets, have all sorts of ulterior motives why they may be betting the way they are. That doesn't necessarily reflect, what they think the outcome is, but it reflects a financial interest. By the way, I've been talking about, how Trump keeps upping the ante on who's not going to have to pay taxes, right? First, there was no tax on tips, and then it was no tax on Social Security benefits. Then it was no tax on overtime. And then he said, okay, we're not going to tax firemen, policemen, active military, veterans, right? He kept exempting people from the income tax. Now, finally, they're floating the idea of abolishing the income tax completely, which, hey, you might as well do that, right? You keep eliminating it for whole groups of people. Why not eliminate it for everybody? And so the New York Times had a story about it because he mentioned it in an interview. And when Trump said, we should get rid of the income tax, he said, well, once upon a time before 1913, we had no income tax. We just had tariffs. So why can't we go back to that? We had a great country before 1913, and we didn't have an income tax. We ran on tariffs. And he's 100% right. I'd love to go back to the tax system that we had before 1913. I mean, if you want to make America great again, that's the way to do it. But what didn't come up in the conversation with Trump is the reason that we were able to survive on tariffs in 1912, and we can't survive on them now, is because in 1913, total federal government spending was less than 2% of our GDP. Now it's more than 24%. So the government is more than 12 times as big now as it was then. So you can't possibly pay for a government this big with tariffs. We could do it in 1913 because we had a tiny government. It wasn't very expensive. And in fact, the only reason the government grew to the degree that it did, the only reason it grew 12-fold since 1913 is because of the income tax. It's because the government could directly tax us that they were able to spend so much money. You see, it was the framers of the Constitution thought that the government would run on excise taxes, which is what a sales tax is. It's an indirect tax. Or a tariff. Why is a tariff an indirect tax? Because the people don't pay the tariff directly to the government. They pay the tariff through the merchandise that they buy. The money goes to the government indirectly. But a direct tax like the income tax, you write a check and you mail it to the government yourself, right? And so the framers only thought that the government would have direct taxes if there was a war. And it was very hard to levy direct taxes because they had to apportion it. But, they supposedly changed that with the 16th Amendment for the income tax. But because we had the income tax, that's why the government is now so big. So if you want to go back to the tax system of 1913, you got to eliminate all these government programs that we created since 1913. That would include Social Security, Medicare, because they didn't exist back then either. 1913, there was no payroll tax. The payroll tax is just another income tax. That's all it is, except it just taxes wages and salaries. It doesn't tax interest and dividends and capital gains, although now the Obamacare tax does hit that. So in a way, but for a while, it was just a wage and salary tax. But, people would still look at that as an income. In fact, for most people, that's most of their income. So you pay two income taxes. You pay the official income tax, and then you pay the unofficial one under the guise of a Social Security tax. But the only way to get back to that tax system is to eliminate most of the government. And of course, ironically, and this is something that Trump doesn't get, because Trump claims that the people aren't going to have to pay the tariffs. So, hey, why do we have an income tax? Let's just make China pay for everything with tariffs. When they got rid of the tariffs, or when they got the income tax, the reason that the public accepted the income tax is because it was going to replace the tariffs. They said, hey, we don't need tariffs. We'll have an income tax instead. The income tax will fall on the rich, and we can get rid of the tariffs that hurt the poor, right? Because they fall disproportionately on poor people who spend their money and pay the tariffs. So Trump doesn't realize that the tariffs are hitting the poor and the middle class. He thinks they're hitting the Chinese. They're not. They're hitting us. But we got rid of the tariffs because we thought we were taking taxes away from the middle class and the poor and shifting them to the rich. So if we do that now, we're taking taxes off the rich and going back to the middle class and the poor. But of course, he's not going to frame it that way, because he's claiming that we had this great country, and he thinks that foreigners were paying the tariffs. But I would love nothing more than to go back to that tax system. But we have to do it honestly, which means we have to cancel a lot of government. We have to eliminate agencies and departments. We have to really shrink the government in order to get back to the freedom and prosperity that we had at that time, which we could have again. It just seems like it's very unlikely given the politics. Anyway, I wanted to mention Bitcoin. Bitcoin didn't do anything really on the week. Again, maybe down about 1%. But what I thought was interesting about the week is MicroStrategy stock just continues to rise. It hit a new all-time record high today at 245. The stock keeps rising even when Bitcoin is falling, when the only business that they have is leveraging Bitcoin. I mean, whatever software company still exists there is immaterial. I mean, their real business is leveraging Bitcoin. They borrow money and they buy more Bitcoin, and that's why they're there. But I think what got MicroStrategy to go up, and I read this report, that some sovereign wealth funds in Switzerland and Norway have big positions in MicroStrategy stock. And people were thinking, oh, these central banks are buying MicroStrategy, so they're buying Bitcoin, because that's really what MicroStrategy is. I don't think the portfolio managers of these sovereign wealth funds even care. I think these guys are operating under the same incentives. They probably get paid on short-term performance to manage these sovereign wealth funds. I think they're making the same foolish bets, just focusing on short-term momentum. Obviously, MicroStrategy stock is the best performing stock, or one of the best performing stock. I think it's beaten every stock in the S&P. MicroStrategy isn't part of the S&P, but I think it's beaten all the stocks, maybe other than NVIDIA. And I think these portfolio managers they want to own it because it's going up. It doesn't matter why it's going up. They don't care. They're just buying it because it is going up, and they want to have it in their portfolios. But I think it doesn't mean anything. The fact that they have it just means that they're going to sell it when the market really breaks. They're just going to be, the other people who try to sell. I think it's the most overvalued stock. I think it is in the index, MSCI global index. It's got to be the most overvalued large cap stock that is out there. But I think the news that these sovereign funds own it is kind of what propelled it to new highs. I wanted to address a point that a lot of people have asked me to talk about, and that is the dollar. Because there are people out there, some of these people are going to be at the New Orleans conference, George Gammon, Brent Johnson, they'll be there at this New Orleans conference, but they're on the opposite side of me, at least in the short run, when it comes to the dollar, right? I mean, I'm out there saying the dollar is going to crash, and they're saying, no, the dollar is going to surge. The dollar is going way up, and then it's going to crash. So they kind of agree with me that eventually the dollar crashes, but they just think it's going to have a huge rally before it does. And I think it's already had a huge rally. I don't know that rally is going to get any bigger. I mean, we have had a big rally in the dollar since the lows of 2008. The dollar index was down around 71. And now it's 104, and it did get higher than that, but that is a rally. Now, obviously, they think, well, the rally could be much bigger, and their thesis seems to boil down to the fact that there's so much dollar debt, and because so many countries have to repay dollar debt, that there's going to be this demand for dollars because I owe dollars, so I need dollars to pay my debt. And the fact that these companies around the world that owe dollars, need dollars, is going to put all this upward pressure on the price of the dollar. And maybe if you just look at it superficially, yeah, okay, yeah, all these companies, all these countries, companies have borrowed dollars, they have to pay back their debt. And, and then if they default on their debt, the people who were owed those dollars aren't going to get them, right? So dollars are going to disappear because companies are going to go broke because they can't afford to repay their dollar debt. And so all this is supposedly going to be bullish for the dollar. And I don't buy into that. First of all, that was true. Companies had a lot of dollar debt from 2001 to 2008 when the dollar index went from 120 down to 70. I mean, that was one of the worst bear markets that we've seen in the dollar. That was an all-time record low for the dollar index. I remember the dollar got down, to just 80 Japanese yen. It's, doubled since then, although it's pulled back from that high. But so the dollar was able to fall in that environment. And, the world still had a lot of dollar debt back then. In fact, the dollar was a bigger part of the global economy, as far as a percentage of reserves or trade than it is now. So it still happened. But what I think the people that are missing is that just because I owe dollars, right? I owe dollars to another foreign entity. So let's say, you're a Polish company that owes a German company dollars. Right? You just did a deal in dollars, right? You didn't do it in zloty, you didn't do it in euros, you did it in dollars. So there's dollar debt on the books of this company. Well, when the Polish company repays its dollar debt, what is the German company going to do with the dollars? Well, it's going to sell the dollars to get euros so it can pay its expenses, pay workers, rent, dividends, whatever. So just because a debt is owed in dollars doesn't mean it's staying in dollars. So yes, there's demand for dollars to repay dollar loans, but then when people get repaid those loans, they sell those dollars, right? It's not like they're just going to hoard them, especially if the dollar is going down, right? If the dollar is falling and somebody is repaying you dollars, you might want to get rid of them as quickly as you can. But also the point is when you owe dollar debt, if I'm a foreign business and I have dollar debt, but I have revenue in other currencies, but I've borrowed in dollars, but my revenue is in other currencies. If the dollar is weakening, that dollar debt is not a problem. That dollar debt is going down, right? It's easier to service that debt. It's easier to repay that debt. And it's not like there's a shortage of dollars going into the global economy. We have $1 trillion trade deficit. We're spewing out dollars, right? The supply of dollars is rising rapidly. The world is earning all these dollars, selling us all this stuff that we can't make. So I don't think it's going to be hard for the companies that owe dollars to repay their dollar debt. I think the dollar debt is going to get easier to repay as the dollar starts to fall. So I just don't buy the argument that because the dollar is at the basis of so many loans that means it has to go up. And that my idea that we're going to have a dollar crash can't happen because the dollar is just going to go up. And of course, if the dollar goes up high enough, yes, it would be a problem, right? If the dollar did have a huge rise, it would be a big problem for companies that owe dollars and have revenues in other currencies. No question about it. But I don't think they're going to have that problem because I think the dollar is going to go in the other direction because we are flooding the world with dollars. We're going to have even more dollars. And I think the world is going to lose confidence in wanting to hold dollars. So even those individuals that are owed dollars are going to want to get rid of them. And in fact, what some people might do who are owed dollars, if somebody owes me dollars and the dollar starts to fall, and let's selling dollars now in advance of when I'm going to collect them. And those sales will put more downward pressure on the dollar. It's all about confidence. Once people lose confidence in the dollar, it's going down. right? And I don't know why they can't figure this out, but I'm sure we'll get into that debate, maybe even on stage. I got to look at my schedule at the New Orleans conference. Anyway, I want to get to the topic that I teased about on the last podcast, which is the BRIC summit. And of course, that's very relevant to the dollar. And so on my last podcast, it was the opening day of that conference. It ended yesterday. So I think it was a 3-day event in Moscow. All these leaders of the BRIC countries came to Russia, despite the fact that we're telling everybody that you got to boycott, sanction Russia. They all came there. And one of the speculations was that they were going to announce something, that they were going to come up with some alternative currency basket or something, or a digital currency backed by something that they would offer up as an alternative to the US dollar. That did not happen. And I didn't think that it would happen. That was a rumor. Putin did address that, and he said that they hadn't done that. I mean, it wasn't something that they were going to do. But what he did acknowledge, and what they all agreed, is that they want to try to reduce the transactions that are denominated in dollars. They want to exchange with each other in their own currencies. So they're not at this point creating a new currency to trade in. But if China and Russia want to do business together, or companies, right, the idea is for the buys or sells to either be in RMB or rupee, right? Not in US dollars. Now, because why? I mean, first of all, it makes no sense. Why should two countries that don't use dollars transact in the dollar? Just pick one of the currencies that's involved, right? You got two countries that have currencies. Why involve the United States, a third party who's not even involved in the transaction? Why use our dollars? Use the currencies that you're actually transacting in. And so that is the goal, right? For the BRIC nations to just phase out the use of the US dollar and use their own currencies. Now, maybe one day they will come up with a new currency. I think they should just use gold. I mean, to me, it makes the most sense for international trade to be conducted in gold. That's fair. That's arbitrary. You're not just picking some other, currency, because everybody uses gold. Gold is valuable everywhere, right? Everybody knows the value of gold. Gold is used in every country. And so you can use that. You don't have to reinvent the wheel and come up with a new currency. You got money. Just transact in real money. That's already there, right? You don't have to create it. You don't have to invent it. It exists. It's been here for thousands of years, right? That's what that they should use. And in fact, if these countries decided to go back on a gold standard where their currencies were all pegged to gold at a specific rate, and they kept that, then there wouldn't even be any foreign exchange risk. If the ruble is tied to gold, and the rupee is tied to gold, or the zloty, or the South African rand, if they're all fixed to gold, then their exchange rates aren't going to fluctuate. And so it would make it very easy to trade. Now, of course, if a government, somehow became reckless and irresponsible, and ultimately they might have to devalue. But if once you get back on a gold standard, you're much more likely to act fiscally responsible, so you don't have to devalue, so you can maintain the relationship that you've established. But in the meantime, what's going to happen is that the dollar is going to be reduced in the transactions. That's the goal. They want to move away from the dollar. And of course, if they're moving away from the dollar in transactions, well, they're also moving away from the dollar as a reserve asset, right? If you're not going to use the dollar as much, if you already recognize the vulnerability, they talked about at the BRIC conference, the political risk and the sanctions and all that. And that's another reason for them to step away from the dollar. So this is going to happen. And it is not an accident, again, that gold is at a new record high. And while people were dumping shares in Newmont Mining this morning and BRIC Gold and Kinross and all these stocks, gold prices were going up. Right? Even though gold initially was down $20, it rallied, $35 from there. Why? Who was buying? Well, who do you think? Right? The same guys that were at the BRIC conference. Because again, they're not buying the mining stocks. They're buying actual gold. That's what they need. They're not making an investment. They are replacing US dollars with a superior monetary instrument that they can hold in reserve. And in fact, a lot of these countries, China in particular, are encouraging their citizens to go out and buy gold, buy silver, right? Our government doesn't encourage anybody to do that. We try to prevent you from doing that. So this is going to continue. And the mainstream, again, is not going to focus on what this portends. This is a big deal that the world is moving off on this trajectory. We're going to focus on trivial matters. I was listening, and I know Elizabeth Warren made a big deal about it. I saw on her X account, but the FTC now, right, is coming out with a law to require businesses that have online subscriptions, like Netflix, Hulu, all these things where you have a recurring bill. It's called a click to cancel, and they have these new requirements where they want to mandate that you make it a lot easier to cancel your subscription, right? And that's what they care about, like making it easier. For me to cancel my Netflix, I need the government to come in and force the companies to make it easy for me. I mean, if I understand you got a business and you don't necessarily want your subscribers canceling, so sometimes, they make it difficult. A lot of times, if I want to cancel a subscription, I got to go to Google and I type in, how do I cancel my Netflix subscription? And it tells me. It's not like it's hard. It's not like I can't figure it out. And now you got, Chat GPT, you got Grok. You go in there and just ask it, how do I cancel Hulu? It'll tell you right there exactly what you have to do, right? So, it's not like people can't cancel these services, but the government, that's what it thinks is important. We got to stop these greedy companies from making it hard for people to cancel their subscriptions. Look, if that's a priority, the free market's going to provide it. Nobody has a monopoly here. Nobody forces anybody to subscribe to a service. And if the most important thing about a service is how easy it is to cancel, well, then people won't subscribe unless they make it easy. Ironically, too, I bet, and I think some of the companies, are challenging this in court because, of course, it is unconstitutional. It's not up to the FTC to determine how people cancel a service. I mean, it should be decided by a free market. It's a competitive free market. And, but I bet if they make it really easy to cancel, right? It's just like a one click and you're canceled. I bet, first of all, a lot of people will cancel by mistake, right? Then oh, shit, I didn't even know I canceled. Then they got to sign up again. But let's say that because they make it so easy to cancel, more people cancel their services and then start them back up again and then, cancel. There's a lot of cancellations. What do you think that's going to do to prices? Prices are going to go up because now the companies are going to have to make more money from the people who don't cancel. So it ends up leading to higher prices. Think about like the model of a gym, right? If you own a gym, people sell a lot of memberships to gyms because a lot of people they don't use them. They don't cancel them. They sign up for a gym. Maybe they make a New Year's resolution to get in shape. They go and they sign up for a gym. And maybe they go for a few weeks and then they stop going, but they don't necessarily cancel their membership. They keep paying. There are a lot of people, once you sign up for something, even if you don't use it, you forget, maybe I'll use it. I don't feel like canceling it. And you just keep it. But to the extent that they actually have a lot of people who cancel the unused subscriptions, well, that's money that these companies aren't getting anymore. So now they have to make their money off of a smaller customer base, and so they might have to raise their prices. So one of the unintended consequences of this government meddling to make it so easy to cancel may be that the people who don't cancel end up paying more money because they're not being subsidized by the people who are still using the service but who don't necessarily use it. But the bottom line is this is not what we need the government for. We have real serious problems in this country. We have a runaway deficit, right? Massive spending. We're going to a crisis. And what are they spending their time doing? Trying to mandate, Netflix to make it easier for people and to cancel their subscription. What about, making it easy to cancel government? What about your taxes? What about how do I opt out of Social Security? There's no way to do that. You got all these young people that would love to click to cancel Social Security. You're 25 years old, you're 30 years old, you're paying this Social Security tax. They know they're not going to collect anything. Why can't they cancel that? No, you're stuck, right? At least Netflix lets you out, right? Maybe you have to jump through a couple of little hoops, but you could do it, right? It's not rocket science to figure out how to cancel your subscriptions. And a lot of companies, when you go to cancel, they make you go through a department. I know every time I've tried to cancel some subscriptions, they offer me something to keep me on. Well, what if we give you 3 months free, or what if we lower this? You try to cancel it, so a lot of times but they always try to save you, right? Before you leave, or you got to cancel, and they transfer you to somebody else who's in a department that is trying to talk you out of it. And are you sure you want to cancel this? What about this? That's how business works, right? Well, you don't want to lose a customer. And so that's life. That's capitalism. But no, they just want to grandstand, and they want to say, this is a horrible thing that it's so hard to cancel your Hulu account. We're going to save you from that. Like that, it's nickel and diming, right? They want to go after banks because they charged us too much when we bounce a check, right? The real expense that is burdening American families isn't the little money that you pay for an insufficient check. It's your taxes that come out of your pay every single week, right? That's the big expense. That's what they should be worrying about. All the harm that they're doing directly. And it's not just limited to the U.S. This happens all over the world. I remember I read this. So this story is a few weeks old, but I never brought it up. But in the UK, they passed this labor market, like Bill of Rights or something, because their last election, they moved to the left. They got the Labor Party, and, they wanted to have this new deal for labor, right? And it's all these requirements on employers, things that they can't do, right? And one of the things was that somebody could take leave from day one. Like you could take a family leave. So the first day you get a job. So in the past, if you got hired, somebody hired you, you had to work for a certain amount of time before you could take a family leave. Some of it's paid, some of it's unpaid. But under this new law, I could go get a job, and the very next day after I get hired, the very next day I can tell my boss I'm taking 3 months off. You got to hold my job for me. You got to hold this position in place because I'm taking 3 months off so I could watch my kid. That my wife gave birth last week, and I just wanted to get this job, and now I'm telling you I'm not going to be here for 3 months. That's like fraud, right? Like nobody cares about the employer. Or what if I'm even a small business and I really need somebody, and I went out and hired somebody, and now they tell me, hey, I'm not going to start for another 3 months, but and now I'm stuck. Who am I going to hire now? Because I got to hire somebody part-time. I can't spend time training them. I say, look, I only need you for 3 months because I got to bring this other guy back. All this stuff, the government comes in, they say, yeah, we're going to put all these requirements. And it's not just that. It's much harder to fire people. But, the harder the government makes it to fire somebody, the less likely you are to hire them in the first place, right? If it's really difficult, like if I know, hey, if I hire somebody, you can never fire them. Well, why take a chance, right? I can't hire anybody if I can't fire them. What if they don't do a good job? But if you can still fire them, but it's not easy, you got to dot all these I's and cross all these T's. You got to do all this stuff. It's like, well, screw it. I'm not going to hire. Let me outsource. Let me go to a company. Maybe I can get the work done in another country. Maybe I can get it done by computer. I'll just work harder and do it myself, right? They pass all these laws. So this new deal for labor is gonna be a rotten deal for the workers in the UK, because they're gonna find that it's a lot harder to get jobs because of this labor new deal, because employers are going to be more reluctant to hire people given what's going to happen to them if they do. But why do governments do this? Again, that's where the votes are. There are a lot more people that have jobs than create jobs. There are a lot more employees than employers. So governments, want to get the votes of the employees. And so they're willing to sacrifice the employers to do it. But the problem is you kill the employers and there go the employees, right? You're killing the goose that lays the golden egg. But again, they're only concerned about perpetuating their job. They don't care about all the other jobs. And then the extra benefit is when you destroy a bunch of jobs and you create a bunch of poor people who are unemployed, well, now they'll keep voting for you because now they depend on your unemployment benefits or your welfare benefits. And then you can claim that, the government the economy is a mess because capitalism doesn't work, or your greedy employer fired you. And so now, the government is supporting you. So they're doing that everywhere they have elections. And again, that's why they go after, people can see, yes, is it a pain in the ass when, you have to spend 5 or 10 minutes trying to figure out how to cancel your subscription? Sure, it's a pain in the ass. And so the government can act like they're doing us a favor, right? And distract us from the bigger picture, right? So they're trying to save us a little bit of money while they're stealing a whole bunch of money, right? They put a few pennies in our right pocket and they take dollars out of our left pocket, and they just hope that we don't notice the money they're taking, right? They want to give us a little bit back in return and act like, they're there to protect us and they care about us, when the best protection for the consumer is a free market. The protection for the taxpayer is supposed to be the Constitution. But unfortunately, the Constitution isn't really being enforced by our judicial system. And that's why the government is able to get away with so many things that were not authorized by the Constitution. Again, as I talked about earlier, that's why we now have the income tax and the Social Security tax, and we have this enormous government, and we can't go back to the economic freedom that we had when we were able to run the country on nothing but tariffs. Anyway, that's it for today. I hope you enjoy the podcast. Make sure and give it a thumbs up or leave a comment. And again, I know more and more people have been signing up for the new newsletters. We got a lot of good stuff coming out at Schiff Sovereign. In fact, that's where I learned first about the comments from Janet Yellen at the IMF. I read about it in my own newsletter that James Hickman wrote. It was a great article, and so I talked about it on today's podcast. But a lot of good stuff is coming, so go to schiffsovereign.com and sign up. Bye for now.